In that regard, I wish to report that at Berkshire's Audit Committee meeting held on March 2nd, 2004, Deloitte & Touche responded to the 4 questions I suggested be asked to the independent accountants by all audit committees. And we're going to put these up in just a second. With respect to Berkshire, the questions and the auditor's responses will be shown on the following slides. And I might mention that I really do think these questions should be asked at all of all auditors, at least annually, perhaps even quarterly. And I really think that if such a procedure had been followed over the years, don't eat them all, Charlie. If such procedures had been followed over the years, there would have been a lot less trouble in corporate America. I mean, for many years, particularly in the 90s, I think there was a weakening, frankly, in auditor vigilance. And the trick, as I've said, is really to have the auditors more worried about the audit committee than they are worried about the management. And it's quite natural when they are essentially hired by the management and when they see the management regularly and they only see the audit committee infrequently that it's tempting to listen a little bit more to management than the audit committee. But these questions, if asked, in my view, and if the answers are put on the record, I think it would have a very helpful effect on behavior, because once on the record, it means the auditors, well, that means they're on the line. And I've been on a lot of boards of directors, and I've seen, in retrospect, things go by that I wish had been called to my attention by the auditors. So we have these 4 questions, and if we'll put up the first one, and I'd like to explain one item. Do we have those up? Yeah. And I'd like to explain one item. Do we have those up? Yeah. You can read the question, and these are the responses as we go along that the auditors have given to these questions. Now, you'll notice on the first one that there is one item that, and incidentally, we owe a shareholder who I think is going to speak later. It was his suggestion that we actually present these at the meeting, and I think it's a good suggestion, and I think if more companies did it, it would be a good idea, so I thank him for the suggestion. The major item, which is not material as auditors define it, but the major item in which we disagree and used a method which I will explain further actually has been changed, but concerns the purchase of life insurance policies or the reinsurance of people who are purchasing life insurance policies. They're so-called viatical settlements, and we have had a business of sorts in that, and it's likely to even be a larger business in the future. And what takes place there is that somebody, usually elderly, has a life insurance policy, and they'd rather have the money themselves than have their heirs get it later on, so they want to cash out early. And as you know, a life insurance policy typically has a cash surrender value, and sometimes those cash surrender values are quite low in relation to the actuarial value of the policy. So sometimes those people wish to sell a policy. We had a case the other day where a 79-year-old woman had an insurance policy amounting to some $75 million. I've never met her, but she must be quite a woman. But the cash surrender value of that policy was $2 million. Clearly, for even a 79-year-old in the best of health, that was an inadequate sum for her to receive, but yet she wished to have the cash herself rather than eventually die and leave it to her heirs. So we paid, or we actually reinsured a transaction where somebody else did it, and we took only 50% of it, but I'm going to use 100% figures. We reinsured, we bought that policy for $10 million. And under accounting rules, GAAP accounting, it is recommended that we write that policy down immediately to the cash surrender value of $2 million. Well, obviously, we think it's worth $10 million, or we wouldn't have paid $10 million for it today. But the rules as they become more clear, say, write it down immediately. I happen to think that rule is wrong. But last year, at the end of the year, there had been a total of $73 million applicable to such policies that reflected our purchase price as opposed to the cash surrender value. In the first quarter of 2004, our activity has stepped up in this field some. The people we reinsure have stepped up their activity, so we get our 50%. And that amounts to, it's going to amount in the first quarter to about 30 million. So we have adopted, even though we think it's incorrect, we have adopted the GAAP accounting, and you will see in the first quarter report of Berkshire the charge for the 73 million of last year plus the 30 million in the first quarter of this year. And that gets charged, believe it or not, to realized capital gains. So by buying these policies for X on one day and immediately writing them down substantially, that becomes a realized capital loss on our book. Now, later on, we expect to get a perfectly satisfactory return from these policies. But that is the main item that is referred to in the auditor's answer on question 1. Now, if we'll go to number 2. I have time to read that. I like the idea of this question being asked. I've read many reports where the footnotes are such that even if I reread them several times, I still don't know what's happened. And we try to write everything in plain English at Berkshire, and we try to explain things within the body of the letter that might give people the wrong impression if they simply looked at the figures, or that they might not be able to discern, because Berkshire has gotten so large that there are all kinds of things that are lumped together in the consolidated statements that I think it's more helpful if we look at separately. And we're going to work annually at trying to disaggregate numbers and information in a way that makes it most useful without turning out something as long as the World Book. And third item is very simple. And the fourth item relates to something that became very prevalent in corporate America in the 1990s, which was moving around numbers from one quarter to another, or moving them from one year to another. And I have seen a lot of that. It's deceptive. I like the statement that the two fellows at Google made the other day, where they essentially said that if numbers are lumpy or peculiar when they get to them, they're going to be lumpy or peculiar when they get to the public. And if there's some reason that requires explanation as to why they're lumpy, that management should explain them. But the one thing they shouldn't do is start playing games from quarter to quarter, year to year, in terms of moving numbers around. And that became very fashionable. I hope it's on the way to being moderated, and we will continue to, each year we will give you these questions at the meeting, and we will report on the auditor's answers.